should we bring Mr. Murphy on and see what he has to say about all this? If he thinks a force majeure is going to happen, or if the COMEX is just going to blow up, or just change, or how it's going to play out?
Sure. Sounds good to me. I'm always up for listening to what Bill Murphy has to say. I mean, I read his Midas report every night at lametropolcafe.com, and it always has invaluable information. And why don't we hear from Mr. Midas himself?
Hello?
Bill.
Yes, sir. How you doing, Roy?
It's Dave Kranzler and Rory Hall. How you doing?
How you doing, Dave? Good. I mean, I'm doing terrible.
You're doing good, but you're doing terrible. Okay.
Yeah. That's the way it is.
Yes, it is. Well, I presume that this gold and silver situation's got you a little bit bummed out.
Oh yeah. I mean, as I said, I'm still working out 6 days a week, but I mean, this is pretty tiresome and gone on too long and tedious and boring and all the same stuff that you guys feel, I'm sure, in some degree anyway.
Oh, I feel it all the way down into the tips of my toes, my friend.
Yeah, this is tedious and you know what they're doing to the shares. It's like Dave, like you said the other day. I mean, it's almost beyond comprehension. I mean, it's what, from when I started, I think it's in September of 1998, the XAU is 25% lower.
The Huey, the Amex Gold Bug Index of supposedly unhedged mining stocks, I think there's 15 stocks in it, is now at 108. And the last time that the Huey was at 108 was, I haven't looked at the graph, but I'm thinking like 2003, when gold was below $400 an ounce. I mean, that's how absurd it's gotten.
Yeah, the XAU, which has been around longer, is I really think it's 25% lower than it was when gold was below 300 in 1998.
It's just incredible. Well, let me ask you this. We were exchanging some emails yesterday, and you made the statement that the bad guys want to make the situation look hopeless. Do you want to elaborate on that?
Yeah, I think that, between the price action, the way they stop the gold cartel, as I call it, stops every rally, and they get the funds and hedge funds and other people to go with the trend, and quite frankly, they've done quite well if you've been short all this time. And then you combine it with all the negative articles that we've seen that are, there was one today in the Financial Times, I think it was on the front page, and it's one after another to change the sentiment to be bearish on gold and to make it irrelevant, which is exactly what the gold cartel wants to do. So they're trying to create a situation where, no matter what happens, it's bad for gold. I mean, if you compare to what the gold price has done to other assets, and after that great chart that Dave put up about the divergence between the Fed balance sheet and so on, and this is what they set out to do. It started in 2013, and they've gotten their way.
Now, James Turk yesterday on King World News, he was saying that the negative sentiment, this is a direct quote, the negative sentiment is unrelenting, with one journalist even calling gold a pet rock. So these journalists who see no value in gold are in effect concluding that gold's 5,000-year history as money has ended. How can they do that, Bill? How can these criminals just simply rewrite history and people buy it?
Well, one of my favorite expressions is, price action makes market commentary. And now what gold cartel has created has attracted all these people that are jumping on the bandwagon and saying, why it's so bad versus, how it got there in the first place. And as I mentioned earlier, the divergences between the different asset classes. If you'd have said years ago you're going to have all this debt and all this quantitative easing and money printing and so on, there wouldn't be one of those same people that would have said the price of gold would have collapsed to where it is. Not one of them. And yet it's happened.
Well, and even with the price collapse in dollars, in euros, Mr. Turk goes on to say that gold is up 2% for the year in euros. So if you're holding euros and you've got them in your bank account, then you're losing money. Whereas if you had invested in gold, or if you had purchased physical gold at the beginning of the year, you would be up 2% as far as an asset. But nobody talks about that.
No, and I was talking to John Emery this morning. We're talking about the price in Canadian dollars, and with the price that they have up there, because the Canadian dollar has tanked so much that they can get a decent price for their gold. I mean, it's not a great price, but I mean it's livable in the sense of compared to what U.S. producers can get.
Do you see the COMEX losing the ability to be the pricing mechanism globally? Do you see that happening in any time in the near future?
Well, I figure, I'm not a spring chicken. I only got so much time left. But we know the talk about, and also facts of gold moving into the, China area and Hong Kong and Shanghai and so on. But at the same time, all the money and power in the world, they know what they're doing, and they're still in full control. And at some point, do I think it's going to blow up? Yes, absolutely. And it is liable to be violent and very quickly. But as long as they're able to get enough physical gold into the market and silver, no matter how they're doing it, and that's some story, they're winning, and they don't seem to have any fear of that changing. So, of course, that's when it happens, is when out of nowhere something happens that they don't expect, and that's when they have to retreat. But think about what happened here. I mean, they went from a 12-year managed retreat to, it's going to be 4 years, another month of all-out attack with different hits when nobody's around. There's no rule of law. The CFTC is impotent. None of these big bankers go to jail for any kind of rigging they do, whatever the market is. It's a farce. So it's like, they'll just do whatever they can as long as they can.
Bill, I'd like to point out for the listeners, because a lot of them haven't been around for as long as GATA has, or for the duration of the gold bull market. And I've always liked the way you characterize the first 12 years of the bull market in gold as a managed retreat, which is really what it was. And I think you've been using that term since, 2003, 2004, maybe. And that's really what it's been. And it's not somehow. I mean, they've figured out how to suppress the price of gold with paper, and yet they still seem to come up with enough physical gold to make the deliveries that they need to into India and China and Russia and some of the other big buyers. Now South Korea is jumping on the bandwagon of physical gold. It seems to me we're starting to see the signs that they may be running out of gold. I mean, GLD has been absolutely looted of its gold, and I'll have an article on that either later today or maybe tomorrow. But I thought Chris Powell had a great quote in his GATA dispatch last night, where he said, "Gold is now priced substantially below its cost of production, mainly because Western central banks and their bullion bank agents have figured out how to make metal appear to be in many places at once, perhaps in as many as 124 places." And he's alluding to the fact that the ratio of gold futures to underlying deliverable gold on the COMEX is now at a by far a record 124 to 1. I mean, do you think we've possibly reached an extreme where this is going to break soon?
Well, all I can say is I hope we're getting close. So far, all the things that any of us in our camp come up with there are anecdotal stuff that seem to make sense and suggest such a thing, and never seem to pan out. And it's been ongoing now for quite some time, and all of a sudden it will. And it's liable to be violent. But in the meantime, you're right. I mean, they're able to get enough physical gold to meet the market. At the end of the day, no matter what we talk about the paper market, the PM fixes where 90% of the physical deals are done. You want to sell your gold, that's it. I mean, paper market, is what's getting it there. Yes, it's directing it. But at the end of the day, there's the gold. So, yes, they've been able to come up with it some way, somehow. And the same thing is true with silver, which is, good grief, it's almost $10 below the average cost of production for a silver producer. I mean, and yet part of the way I guess they've been able to do it is the way that what they've done to the open interest, which is, been talking about for a long, long time, and it's still back up at its all-time high territory. It doesn't go down, and yet the open interest, historically, it ought to be a minimum half of what it is. I mean, there shouldn't be anybody hedging something. I know it's a byproduct in other areas, but $10 below the cost of production. It's unprecedented, and that's eventually it's going to blow up.
I was having a conversation with my business partner and co-fund manager yesterday, and we came to the conclusion that the dislocation between the paper price of gold and what the true economic free market value of gold is probably the widest dislocation of any market in the history of the universe.
Well, I wouldn't disagree with that. And again, this has all been done on purpose, and it's been something to behold that they changed their tactics 4 years ago, and it's about as big as you can get and all encompassing.
Well, I mean, in my opinion, and I don't know if you feel the same way, but I just think that if you look at the sentiment indicators, the plundering of the physical inventory of the COMEX and GLD, at least to the extent that we can trust the numbers that they're reporting, I highly suspect that the numbers they're reporting for the GLD inventory are inflated by quite a bit in terms of the actual amount of unencumbered gold sitting in the HSBC vault. I also suspect the same thing of the COMEX, because I've pointed out to people, and I've addressed Ted Butler directly in emails, and he can't respond, is that if JP Morgan and HSBC and Scotia are filing their COMEX inventory reports and commitment of trader reports honestly and ethically, it would be the only part of their business that they report honestly and ethically, and there's almost a no probability. That's a no probability event. So not only can we not trust the numbers, but I mean the numbers just the amount that they're reporting keeps declining, and I have to believe we're at the end of this. I really do.
Well, we could be, and of course, as always, you only know in retrospect. But regarding Morgan, I mean, it is a fact. What do they have to pay? $600,000 fine for doing exactly what you're saying, a misreporting. I mean, this is on the record, and that's just one thing in terms of what they filed for these reports. So you're right on the money there. And as we know, J.P. Morgan's the Fed's bank, and no matter how big gold and silver are to us, it's still, chump change for what they do in their overall scenario. I mean, what is Morgan paid $32 billion in fines over the past years, and what they make $100 billion and pay $32 billion. It's in trouble, and it just goes on and on.
Hey, the fines are the cost of doing business for them.
That's right.
And that $650,000 CFTC fine levied on them they were stuffing commercial trades into the large trader account in the precious metals. So that, and $650,000, it's like, oh, is that all you're going to fine us? Well, we'll just keep on doing it.
That's right, and that's what they've been doing.
Yeah, they probably made more on that on this last smash that was done on gold.
Yeah,
they made millions on that.
Well,
There you have it.
other markets just, again, they don't trade like that. That's the second time, as I just pointed out recently in my commentary, where, we had that thing 2 years ago in April 2013 where gold went down $200 when nobody was around. And they made a statement then, and there was no questions. And, time and sales to find out who's doing it is really simple. But, whether it was some other trader or the gold cartel who, contracted somebody to do it and say, we got your back. I mean, these things can be done in various accounts, although whatever happened to position limits, I mean, that's another joke. Whoever did that trade, I mean, that is just an extraordinary thing to do when nobody's around and have it happen in seconds and minutes. And then, of course, now it's fading into oblivion like everything else does. It's forgotten. And it shouldn't be.
Yeah, and that's part of the problem. I mean, the way I see it, part of the problem is everyone has such a short memory because everything's happening so quickly. And then the other part of the problem is, I mean, let's be honest, quite frankly, the general population of this country doesn't want gold to go higher because in the back of their minds they know what it means. They know what a rising price of gold means, and if the price of gold gets out of control and moves up to even half of where it should be, it'll confirm what is sitting in the back of everyone's mind about how rotten our system is.
Which is just why this gold cartel is doing what they do. I mean, and you're right. I mean, what happens every time gold spikes up on good news? I mean, supposedly good news for the gold markets, which is not allowed to ever hold, by the way. It's bad for the politicians. It's bad for the bankers because it has to do with something's wrong, a crisis, something about interest rates, about the dollar. It's bad for business. And so, yes, I mean, as far as the average person is concerned, they love seeing the gold price. I mean, I don't think about it that much, but, they don't want the gold price going up. It's like I just said, it's bad for business for everybody that's in power.
That's exactly right.
Do you think that do you find it interesting, Bill or Dave? I mean, either one. I mean, the fact that it took 716,000 ounces of paper gold just to get a $50 movement. Doesn't that seem to be a lot more paper ounces than to generate that small of a move than and compared to the past?
Well, I'll probably defer that to Dave, but if there wasn't something really strong behind it, like this gold cartel, what can happen in a market like that? I mean, it just boomerang and go right back up. But of course, gold never does that. There's other markets that have in the past, although it's hard to even compare with when and how they, with nobody around when the price gets bombed. But think about that. The money, I mean, what if all of a sudden it's, say, in commodity terms, we'll take it. Thank you. And the next thing you know, it should have been back to be unchanged. But no, here we are, we can't even get above 1,100. Anytime it gets close, the bad guys are there to stop it.
Bill, I will point out, though, it's true. It seems like, like James Mack, who's been an invaluable contributor to your Midas report every night, has pointed out right now, 1096 seems to be the line in the sand they've drawn. But on the flip side, they can't get it below 1,080. And when you think about the amount of paper that they are throwing at the market now, I mean, you're at 124 to 1 ratio on the COMEX, historically unprecedented ratio of paper to underlying physical in any commodity market ever. When you think about all the negative sentiment that they're throwing at the market, I mean, they are doing everything they can to try and destroy gold, and yet they can't get it any lower than where it is now. I mean, it tells you that there's a huge physical bid under the market, and I think that's what's going to stop it. And now the question for me is, how long is it going to be before it springboards back up?
Well, that's a good point, and I agree with you. Obviously the first step is 1,100. The real key is the breakdown point at 1,130 to negate what I was just talking about, where they actually what you're bringing up, it stuffs them, where they can't get away with it anymore, and that's what obviously we're rooting for. But time will tell. I mean, we could have been talking like this last summer, to be honest. I mean, look what the last year's been like, and it's hard to know. I think it will happen out of nowhere, and it could be very, very violent, and that's what you're talking about is going to kick in. I mean, I wish one of us had a crystal ball, and the things you're bringing up are really important. And the question is whether that's going to be enough and we get that trigger.
3 words, Bill, and I haven't heard you use this term in quite a while. Commercial signal failure.
Well, at some point, that's what has to break the market, is that the bad guys are there, they've got their positions shorts on, and the physical market just carries them out, in which they're forced because they can't make deliveries or they can't do all the kinds of things you've been talking about in this show, that they just have to get, to retreat. And we just haven't seen it yet. But at the end of the day, that's how the market has to go, with the commercials being short. I'm not talking about the bottom, but even after a rally, because when the trend changes, the funds or anybody who's short now, they talk about the biggest short position by the hedge funds ever, they will turn. And the systems will go long and they'll all become buyers. That's just the way the game's played. And you got to have a seller at some point or at some price. So that's what a commercial signal failure is all about, where the norm is for the commercials to win all the time. But when the big move happens, it will be because they get blown out of the water, and they'll be the shorts.
And I believe you've seen this happen, I think, in the copper market, if I recall correctly.
Yeah, I've seen it in a couple of different markets, and that's what's happened. And also, quite frankly, that's when the normal hedgers would come into markets, and specifically referring to silver. I mean, it's still somebody wanted to hedge it, $28 an ounce, $38 an ounce, well, and then to lock in profits. That's what historic hedging was all about, and it's a good thing. It's been made a bad thing since I started here in the gold silver markets. First of all, with gold below 300, and now especially what they're doing in silver at these insane prices. So it's going to be interesting to see how it plays out when this all changes, because I believe what you're saying. I just don't know when it's going to happen. And as I said, it's like looking for a ship on the horizon. I mean, it just isn't appearing yet.
I've got one question for you, Bill, and you alluded to it a moment ago, and I want to go back to 2013 when Ken Hoffman did the piece on Bloomberg, and Craig Hemke over at TF Metals Reports refers to it on a pretty regular basis, and that was when he pointed out the fact that the LBMA was pretty well drained of all of its gold. And we've just been discussing how gold, it's all paper gold at this point. I mean, is there not...
Excuse me?
Is there not any physical gold or silver remaining in the market? And if so, where is it coming from?
Well, at the end of the day, again, I go back to the PM fix. There's enough gold at these low prices that's being made available. Now, what you were talking about earlier, where they're getting it from and the different schemes they've come up with to get it there, they've been able to do it. So the paper gold, this is the way I see it anyway, it's directing the market. You still have to have the gold at the end of the day to meet demand, or all of a sudden there shouldn't be anything available down here. Why is it? What was the PM fix today? Around 1092. You want us, you're doing a gold deal today. That's the price. So they figured out a way to direct the price with a paper thing, which is put it where it is. But at the same time, they're able to come up with a goal. Maybe, you guys got a better handle on that than I do. That's my bugaboo.
I just don't know where it's been coming from, because to be perfectly honest, I've been asking that question for close to 2 years now of a great many people. And I may have even asked you in the past. I mean, I can't understand, in particular in light of the fact that mining production is collapsing, period. Mexico, I just found out a few days ago, Mexico is down 10% just in the month of June, year over year. Okay, they're the world's largest silver producer. And if you've got record demand for physical and declining supply, but yet the price keeps going down, the question that I don't understand where it's coming from. I cannot figure it out. I mean,
Well,
unless there's some hole in the ground that only the bullion banks know about, and they go down and they dip into it. I mean, that's the only thing. And I don't know. I'm at a loss.
well, yeah, we've been asking this with some of my colleagues about silver for some time now. Where is the silver coming from? And the smartest guys that I know, they're number crunchers. They can't tell me where it's coming from. And I know one of my sources. I mentioned this the other day. Quite frankly, it doesn't make any sense to me. But these are quality people, good guys, dealers, been in the business. They say that the silver situation is the most explosive they've ever seen in terms of what's coming down the pike. That to get it in size is becoming extremely difficult. They expect it to disappear sometime this fall where you just can't get it. And they're adamant about it. At the same time, the price action is the worst I've ever seen in my life. I mean, I use the analogy, silver trades like it has an anchor around it. I mean, it's just dreadful. And how they're carrying it out, like you, I'm mystified. But I do think that when the change comes, it will be so violent, people won't understand that either, and it's going to be breathtaking. And but when that's going to be, your guess is as good as mine. And all we can do is to look for some of these anecdotal positives that we're talking about actually manifest itself in the price action. And that's what's been so bad, is that a lot of things that we've talked about over the past 6 months haven't accrued to the price.
I agree with everything you said there, Bill, and I think that everything that you just mentioned are the indications that we are at a bottom. And I agree with you. The move up is going to be sudden, unexpected, violent. And my guess is a lot of people are going to look back a year from now and heavily regret not buying physical gold and silver at these prices, especially silver.
Well, I'm with you 100%, and it's all the shares in there too, which we discussed briefly earlier. This has been a joke, and it's really punished people that believe in what gold and silver are going to do. And at some point, I mean, I honestly believe that their moves are going to be of historic proportions when everything changes, and that's a whole different subject in terms of our economy and what they're trying to hold together, and all the other issues that you guys know about very well. And that also can change very quickly, and eventually it's going to really pay off. But right now, it is quite difficult.
Well, Bill, why don't you tell everybody how they can follow your work and get in touch with you?
Well, the website, themetropolcafe.com, and people can sign up for a 2-week free trial, see if it's of value to them. And then as far as GATA goes, Chris Powell, my colleague, does a great job, and go to www.gata.org and get on his list. So I thank you very much for having me on the show. You guys do a great job with this, and I'm proud to be a part of it.
Well, we're proud to have you on the team, Bill.
Thank you. No, I know. I mean, this is far worse than it was in the bottom of the market. Far worse. Because back then there was still hope, and we understood it. And back then, nobody was making any money, and people were losing money, but people are being wiped out this time. And also, of course, you had this at around 2002, you've got people doing well in other areas. And in our sector, they're getting killed. So you take that dichotomy between the two, and it's just brutal.
Well, you know what it is? It's the thing of it is what you just said. People in the pure paper side of the market are doing really well, and they're doing really well for the wrong reasons. I mean, what's going on in the stock market is completely dislocated from economic reality, and it's the same thing in the gold and silver market. We're getting abused, but we're getting abused for the wrong reasons. And I attribute that to, we're not wrong about gold and silver. Where we were wrong is in the amount of criminality and corruption that has infected our system, and the complicity of the government. The people who are supposed to enforce the rules to prevent this criminality and corruption, they're in on it. And I would not have seen that coming 10 years ago, to the degree that it's hit our system.
Well, that's what I don't understand is people want all these other markets, which the big banks have been fined for criminality. Whether it's energy, LIBOR, currency, mortgages. I mean, it's unbelievable, and nothing happens to anybody. And then I said, we touched on this earlier. I mean, and it goes on and on and on, and the CFTC does nothing. I mean, I didn't get into it, but I mean, the only market that they couldn't find any wrongdoing, and with all the other markets they did, was silver. Spent 5 years on it. It's a joke.
But we know what the reason is.
Yes, we do.
Because, if you look at Exter's pyramid, physical gold is at the bottom of it, and that's the nexus of the entire system. And if they were to let gold do what it should be doing, it would destroy their ability to rig everything else.
That's right on the money.
Well, and it would return the sovereignty to the people, and people would be much more aware of what's actually happening, and we can't have that because if you can't control them.
No, that's right on the money too.
That's right. Honest money takes power away from a dishonest government and gives it back to the people,
which is where we want it.
Well, maybe the next time we have a chance to do this, it'll be a whole different scenario.
I think it's possible. I mean, I've had a few people who, are market people who we don't really discuss gold and silver anymore. But, a couple people have said, I think your time's coming in the gold market.
Well, can't come soon enough.
Can't come soon enough.
Tell me about it. I thought 2008 was bad, but 2008 was 3 or 4 months of this torture. We've had 3 or 4 years of this torture.
That's right. As I say, that situation about they're trying to create a hopeless feeling, and it's working. I mean, I don't feel that way. I mean, but that's what they've engendered, and it's hard for people not to be that way. And of course, I'm seeing now in the last year or two people disappearing. And, no longer on the scene, just gone.
I want to ask you guys about that, about the 70s, because I know that there was like a 2-year period where where gold went, I believe, down to about 100, or no, it was about 300, and then it made its move to 800. And I had no concept of gold or anything of that nature. I was a teenager at the time. So how does, in your research, Bill, how does that compare, or is it a fair comparison to look at that 2-year, I think it was about a 2-year window, to the 4-year window that we're dealing with currently?
Well, it's funny you bring that up because that's when I knew Jim Sinclair's broker back then, Calvin Coppage. And he was involved, of course, with Jim was the legend. And, I was involved with Ray Dalio and feeder cattle and corn and stuff like that, and hogs. So I was just watching this gold thing go up from a distance in awe. And I think where it can compare is, again, the attrition of people getting out. I think that what will be different this time, that the move will be much more volatile, although that went up in a few months there pretty quickly. It'll be similar to that, and it'll be breathtaking when it finally goes. And I think you're going to need something to really shake things up. In other words, a black swan event, something that forces the establishment gold cartel to retreat, as we've discussed, and have to do so dramatically so because they're just completely overwhelmed by all market events. Right now, with things being copacetic, they can direct the resources to this area and do what we've already discussed that they've done. But if all heck breaks loose in different aspects of the financial arena, it can just, every man for themselves, and they can get overpowered. So that's what I see coming, and I just don't know when it's going to kick in.
Yeah, Jim Sinclair, I think it was about 2 years ago, back when he was doing interviews on a fairly regular basis, he said that the time was coming that it was going to feel that there would be days when it would feel like your hair was on fire. And I think that we are fast approaching those days.
That wouldn't surprise me. All right. Thanks much.
Thank
Thanks,
you.
Bill. We'll speak to you soon.
Bye-bye.